smart contracts that are going live on the mainnet on September 12th. So there's a lot of hype around Cardano and their smart contracts. I'm personally in some of these projects, and yeah, I'm pretty excited to see what happens with those smart contracts. There's a lot of projects that are looking to build on that one on Cardano, so that'd be good to see. Binance Coin, you can see, is actually doing pretty well as well. You know, up 27% over the week. I'm not really a follower of XRP, but they look to be pretty stagnant right now. I know they're still dealing with that like Ripple lawsuit, right? Dogecoin has fallen pretty far. I mean, I'm pretty sure at one point this was like close to like $1 or something. So this has come down pretty far. But it's still holding the number 7 spot. So that's surprising as usual. Polkadot has been really stagnant of late. You know, they're pretty undervalued. They're crowdfunding, and though like their parachain slots are being auctioned off. They're not fully done. There's been a couple that have been done, but there's still more to come. So that's why Polkadot's kind of been a little quiet lately, and they haven't been really performing as well as, for example, for Cardano, who's releasing their smart contract soon, right? And then you got the likes of like Solana. They pumped really big. So it's only negative 1.1% over the 7-day, is because if you look at like the 2 or 3 month, it's probably like 100% plus, right? They had like Sam from FTX had a lot of people raising money for Solana and some of the Solana lower like dexes like Radium and some of these other ones. I'm not in Solana. I actually saw Solana at like $25 and I didn't invest any, and I'm salty that I didn't get in. But it's really fast. It can process up to like 65,000 transactions per second, like base, with like no scaling. Yeah, so that's a pretty hot coin right now. It has run up pretty far, so like I would be wary of like buying into like a massive pump like that. But definitely a solid coin to look out for when it dips a little more for me. Uniswap has been a little stagnant lately as well. I think that's because other chains have been pumping as of late as well. I think one of the biggest ones that you're going to see is Terra. And I know that Ed, you had talked a little bit about Terra, and you had asked some questions about that. So I was actually just looking at that because I started recently looking into the Terra/Luna ecosystem. And one of their really big, their mainnet is basically just 2 weeks away. So it's called Columbus 5. And basically what it's going to do is it's going to add interoperability, faster speeds, and it's also kind of implementing like a EIP 1559 kind of mechanism in which like a bunch of Luna will be burned. Basically what Luna is it's just a bunch of applications and dApps built around their stablecoin, UST. So basically once you like mint Luna, it burns UST, and then it does the opposite when you do the opposite. So basically, the more people that use their stablecoin, the more valuable Luna becomes. And they only have like 6 dApps, and they're at what is that? 12 billion market cap, and there's over 50 projects apparently building on Terra. So that's really cool, and I think that's a really interesting project that I'm excited to get into. I haven't bought any yet. It has dipped a bit. So I'm considering just taking a small chunk out of my stablecoins to pick up some Terra Luna, and I'll let everyone know how that goes. Just to wrap up, like the kind of, I only wanted to do 20. Like Chainlink has been honestly pretty stagnant. You know, the biggest Oracle, the most robust Oracle play for data and like price feeds. So if you're looking for any Oracle, honestly, just pick up Chainlink. You don't want like critical infrastructure like price feeds and whatnot failing, especially if the market is crashing. In the case of, for example, like if you take a loan out and you're over collateralizing your loan, you could get liquidated simply because the price feed isn't correct. So that's a solid Oracle play. The last one I'll cover is just Polygon. Still, even though it's pumped 12% over the week, it's still pretty. It's still down like 40% from all-time highs. And they recently just bought Hermes, layer 2 ZK rollup blockchain. It's a smaller project, but they bought it for like 250 million. And then there was another partnership announced today. I can't remember the name. It's some Chinese or Indian company, I believe. But yeah, that's kind of just a quick wrap up of the top 20 coins.
Yeah, thanks, Christopher. So that's very good to know where all the cryptos are. If you do you want to get more like updates? I don't know. Are you planning on doing daily videos or weekly?
Yeah, and you guys can give me some feedback too. But yeah, I was potentially looking at doing like like doing maybe like 2 live streams a week. I don't know how Cryptos RS does 2 a day, and other people so much. Like I think I'm gonna start with like 2 a week, but I think it would be really cool because I'd be able to like answer questions. I haven't been in the space super long, but I've been in the space for a little under a year now, and I haven't lost my head yet, so that's good. There's a question from the chat there from Warren. It says, "Can we talk about 500 million stolen from I think Polkadot?" No, it was from Polygon actually.
It was $600 million.
Yeah, 600. It was 600. So basically, 600 million got drained from, I believe it was Poly Network. That was the one, right?
Yeah. So it was an interesting story what happened because first the hacker drained the funds, and then the Poly Network made a public announcement asking for the hacker to return the money or to work something out, right? And actually, the hacker started like giving back some of the money. Like he claimed to be a white hat hacker. He found a vulnerability, wanted to show the world that that these platforms need to be safe, right? And eventually, the platform offered him a $500,000 like bounty and a job as like
I thought that was pretty funny.
Security advisor. So and then eventually the white hat hacker, also called Mr. White Hat, returned all the money that was drained, and I guess he's on board as got a job with them. Whether the hacker had that in mind when he first started, we'll never know, but it's I think it's a happy ending to see that a lot of people who were worried about whether the funds are safe, they are likely getting the money back now. So so that's the $600 million from Poly Network, and this is a risk that you have to be aware of, that whenever you're working with these DeFi platforms, in the I guess in the financial term, right, you call this platform risk, right? Which is whatever platforms you're on, you should always assume that there's always a risk of a hack or an inside job, like, or anything that could happen, right? And we always tell people, right, that whatever you do, right, always practice risk management, right? Always practice risk management. That you don't ever want to just go all in with one platform, or even worse, right, put in money that you can't afford to lose. Because I've heard of stories of people like taking out a loan, right, taking out mortgages against the houses. And this is not like a guy who bought at 20K like years ago, but these are like people who are like buying it to put it into platforms like BlockFi and all these other platforms where they think that they're getting like a 5% yield, and they think that this is like a crypto GIC, right? But it's not really so GIC, right? The G isn't really guaranteed, right, when the platform disappears. So you have to be careful about the different platforms you are in. So yeah,
and it's funny you mentioned that, Ed, because like the Poly Network hack, like Poly Network is essentially just a cross-chain bridge, right? So there's been a lot of cross-chain bridge hacks because it's just easier to attack, and there's a lot of money that's flowing through those chains. So a lot of people are looking for vulnerabilities like that in order to exploit those sorts of things.
So yeah, I just got the results from the poll. So let's take a look. Seems like we do have a pretty fair distribution of people. We have some who are very new, and we have some who have been around for some time, and you want to learn more, right? And then a lot of people like around the middle. So it's good to see we have a wide distribution of people like around this space. And yeah, so before we dive into the main component, the main presentation, just want to see whether you guys have any questions about the area of decentralized finance, so that I can cover a bit when we do get started, when I do go over it. And it is a pretty big space, and I can assure you that for most of you, you probably will have to come back for a couple more presentations, couple more sessions, right, to fully understand, fully grasp the idea of like how decentralized finance and how a lot of these opportunities work, because there's a lot that goes into this, and there is a learning curve, but I wouldn't say it's that steep. You can probably pick it up within a month, at least get a basic understanding, right? And then you can start getting some good find good opportunities, maybe start making some good return, maybe within a couple months. So let's see, we have James, who said he's interested to hear more about people's experiences on other networks other than Ethereum. Yeah, and this is especially Solana, Avalanche, and future protocols like Cardano. And yeah, so this is what this session is about. I do want to go over some of the newer platforms that are recently getting popular, that are starting to pick up, because if you look at the price of some of these projects, right, especially like Avalanche, right, and Luna, they have been on a rip this month alone, and you don't want to miss out on this opportunity. But at the same time, you don't want to get in at the worst time too, right? Where you could fairly say that we could argue and say that this is like a top, sort of like a mini top we're experiencing. So you look at tokens like Terra, right, trading at $29. If you look at where it was for the last 30 to 90 days, you can see Luna wasn't really doing that great. It was at $5, $6, right? It's 30 days ago. 30 days ago, it was at $5, and now it's about $30. If you put in $1,000 right there, you could have already 6x your money right there. This is what happens when projects start taking off, right? And then same thing. You look at I think someone
Solana.
Solana, right?
Yeah.
Let's look at Solana right here, right? Solana. If you look at, I'm stretching this out to 180 days, just to include that dip, right, we experienced in May. Back in May, right? You remember when Bitcoin dropped and it was close to breaking 30K. In fact, it did break 30K. Solana was only at $24, right? And not just once, probably again here, and another time here, right? There's been a couple opportunities for people to get in on Solana, and a lot of people, they probably were wondering why is it still around here at a $20, $25 range, right? And I would not be surprised if some people sold, right? They gave up, right? And what happened afterwards? It started going up, $23, let's say $25, all the way up to $78, $75, right? So did a 3x right there. And congrats for anybody who bought, who did their shoppings, right, during the time when Bitcoin and all these other altcoins were low, right? A lot of people made a lot in this space, right? But it's not just because of the name, right? I mean, Solana has that brand power because of their team, right? Their team, they are some of the big names on the team, they are actually buying advertising rights and everything, with stadiums and such, right? So they do have the strength, but the stronger, but the bigger reason for why the rise is because of the ecosystem is starting to take off. More and more projects are starting to release on the Solana network, and same thing for the Avalanche. Avalanche did a big pullback right now. Not financial advice, but I could picture some people buying in right now, saying that it's a dip. Whether it's a good dip or not, time will tell. But you can see that back when it was at $55 and now it's at $46. This is like a $10 discount you can get per coin right here, right? And with Avalanche right here, right? You can see that like during the dip in May, right? The dip in May, $15. And then there's a bigger dip in June and July, right? $10 right here, right? Avalanche itself did like you can say like a 5x right there. And
a lot of the CFD brokers don't offer these altcoins like Solana.
Yeah, for these tokens,
I guess that's another conversation in which like how do you buy directly on the ledger?
In terms of where to get them, like you do have to shop around like with different exchanges, because not all of them will offer Solana.
Not a CFD broker, but an exchange.
Yeah, like, and it depends on which ones, right? Because a lot of these tokens, they are like so new. They're so new that you can say that the regulatory bodies haven't like done an audit or anything, right? So they haven't been given green light for any like local exchanges to sell, right? And some of these may not even be listed on Coinbase. That's how, I guess, fast some of these projects are, right? But the ecosystem, you look up
like CoinGecko,
like you look up like Avalanche ecosystem, right? There may be a more recent one on Twitter, but you can see that like they're pretty solid. I mean, like this is not like vaporware, right? You have a lot of projects, right? You have a lot of projects that are on Solana, not Solana, but Avalanche right now, right? And some of these, they are like exchanges. Some of these are like crypto GIC and these opportunity, and people are making money, and that's why there's a lot of demand for Solana right now. But there's also more to it too, right? You also see like you have to take a look at like what is happening like at the ecosystem level, right? At the larger level, right? So you have like Avalanche, Rush, right? So you have like something like this, right? You have like a Avalanche Rush, which is like an incentive. Like basically, the Avalanche chain team decided to allocate. Well, this article is $15 million just for one platform, right? But here, right, this 15 million is actually part of a larger incentive, a larger campaign, right? Larger like advertising push, right? Where they are putting in about $180 million. So picture this, they're giving $180 million rewards for anyone using the apps within like Avalanche. And this is why a lot of people are just rushing into Avalanche, right? They're rushing into all these projects. Right?
What is Avalanche? Is it a broker?
No, Avalanche.
No, it's a blockchain. It's a cryptocurrency.
It's a cryptocurrency. Okay.
Yeah. So like you have like I have to switch my MetaMask to Ethereum to. I'm so jumping all over the place today right now, but I think you see this is how excited I am about a lot of these projects right here. There's a lot of opportunities to earn, to grow, right? To grow in this thing. And the best part is this is not like stuff where you usually like sell like lotions and potions. You don't have to recruit people. You put in your coin, you put in this USD, which is like a stable coin, which is similar to like putting in US dollars, right? And you get like 11%. Well, you get 18, my bad. You get 18% APY right here, right? Meaning you put in $10,000, right? And then a year later, you get like 1,800 as interest. And this is the crazy part, right? So Banky, this platform allows people to do some lending and borrowing, right? And this is the crazy part. You have the other side where people are borrowing. So, and this is actually negative interest, right? Or should I say positive payouts, meaning you have people who are borrowing, they're taking out loans, right? They're taking out loans against the crypto capital, and they're getting paid to borrow. And of course, they don't pay you in, if you borrow US dollars, they don't pay you in the US dollars reward. They pay you in a Banky reward, right? Which you can sell. You can liquidate the tokens they give you. And this is one of the exciting things about being on these platforms, right? And these are like these platforms. At the end of the day, they are not like banks and such, right? They're not like investment banks or maybe even not an investment bank, but just banks where you take out a loan. These are like platforms that are decentralized, and these platforms are like set up as a I can say as a co-op, as a voting platform, meaning anyone on this platform can vote, right? You get like voting shares. You can vote on the interest rates. You can vote on how much they pay out, right? And to decide like how much of a vote you have is based on the number of tokens, right? The Banky token, right? So, which I'll probably go dive deeper a bit later on. But this is the exciting thing, right? You have these opportunities where they are giving out a lot of these governance tokens simply because they are new, they're starting out, and they want to stand by their values of a platform that is run by the people, right? So this is the exciting thing where if you're willing to hold on to these tokens, right, for the long term, right, they could be worth a lot, and we have seen that. If you for those who may have been around, for like from last year, you guys may remember platforms like Aave, right? Aave or platforms like YFI, right? These platforms when they first started, they were giving out these governance tokens, voting tokens, right? For like early users as a reward, right? For using the platforms, right? Even Uniswap, like platforms like Uniswap, they were giving out like tokens for people simply just for like using it. They give you free tokens. And a lot of these tokens, they are worth a lot like over time. So you can see, right? Let's take a look at Aave, right? Aave right here, right, is worth like $300 per token right here, right? You also have like Uniswap, right? Uniswap, some people who may have been around like early enough, they may have gotten the free airdrop from Uniswap. This was around, I think it was like 400 Uni tokens. I don't remember. I didn't get it, right? But it wasn't early enough. But a lot of people got the free token, right? Got the free token of around 400 tokens. I believe it's 400 tokens. That's around like $10,000 right there. You get $10,000 just by making one transaction on Uniswap. So this is the exciting thing about this, right? And I guess I'm going to start diving into the main presentation because we're just going around jumping around all over the place right now. So yeah, so before I start, I just want to say that like we're just a gathering of like crypto enthusiasts, right? None of what we share should be taken as financial advice, and do your due diligence. Come back to more of these sessions to learn more, right? So that eventually you can make well-informed decisions. So yeah, so start off. Everything that I share, like it is covered in one of the many ways, right, that people can earn crypto, and this is within the area of yield farming, the area of DeFi, the area of you could also say that this is also part of the area of staking, lending and staking too, to a certain extent. You can say that too. So yeah, so it's a pretty exciting space, and this is like never before has this been available to people, right? And this is a chance to get in, right? So there are different levels of like involvement, right, on how to get these passive income, right? The most obvious way to go about is you can, and also the most recognized way is you can stake on the blockchain. I mean, this is a very common way, and also I would say it's a pretty safe way as well too. Like it's pretty safe, pretty solid. Like you're working with like solid projects. Like this is like you're working with like Ethereum, the whole like blockchain, the whole organization right behind Ethereum, right? You're not working with anything that is like fly by night or like some new guy, right? You can stake, and if you don't know about staking, right? I don't know, do they have the calculator here, but they used to have a calculator, but Ethereum staking, they give you the opportunity to you run your own node, right? When I say node, basically you have to like dedicate like a computer to validate the network, right? And by doing that, it's similar to mining. It's like mining, but you're doing this on in a system where the ecosystem doesn't have that. They do not do mining anymore, right? And instead of buying rigs of like GPUs and such, right, you have like a set amount of token, and you dedicate it, right, to keep the whole ecosystem running. And in return, they give you like a cut of all the transactions. So it's like mining, but instead of buying GPU, you have to buy like some tokens up front. And for Ethereum, you can either buy like 32 ETH, or you can like partner with another platform, right, where they'll pool different people's contribution together and have 32 ETH to start staking. And depending on the number of people staking, right, you may be able to get like a 5 to 15% return. And there used to be a slider on the side, so I don't see it anymore. But this is just the first step, right? You can stake, right? You also have other networks too, like Ethereum is just one of them. You can also stake with Cardano too. I know Cardano staking is very popular as well too. People love just like having the Cardano tokens on their Cardano wallet and then dedicating it, right, to the staking system and earning rewards on it. So this is just the first level. It's a very conservative way of staking. The next level is you can stake with centralized platforms, right? Centralized platforms like Binance, right? Centralized platforms like Nexo, I think Aaron mentioned briefly. You have BlockFi and all these other platforms where you can dedicate certain tokens, right? So for this one, right, on Binance, right, they take like they have an offer where if you park your BUSD, which is like a stable coin, right, or you park BNB, which is the Binance token, right, they'll give you like a 5% return, right, or 6% return, or whatever they state here, right. And they have like a farming period, right? Meaning for 30 days, they're going to give out this token, MBOX, right? And whoever stakes here, or here, they receive a cut of it, like over the course of 30 days. Of course, this is like an annual yield, meaning you have to divide it by the number of days that you have staked. And I've known a lot of people make like they made a lot just by staking here, right? Just because they have a lot of like BNB tokens or BUSD tokens or any other tokens, whatever tokens they do offer, they just stake it here and they earn passive income like that. And some of these tokens, they do give like very generous yields. You can see like this token, it's called Alice token, right? If you put in like let's say $10,000, right? And you get about like $300 worth of tokens, like $300 worth of tokens, just by staking for a whole month right there. So, and then you can see a lot of so this platform Binance, that they do have a history of like giving out like tokens that you just stake like whatever they ask for, and they give you the reward. And for them, what's in it for them, right? For them, they get to drive up demand, right? Drive up demand for some of these other tokens. And And this is like use cases and applications for these tokens. And for stakers, right, you get free tokens, right, which you can sell whenever you feel like it. I know some people, they sell like right after they receive it, they sell it right away because they just don't know whether these tokens are worth anything in the future. But those who've been like sticking around, right, they stuck around and they actually kept these tokens, right? Some of these tokens could some of these tokens could be worth a lot. So I'm just going down this list. There's actually one or two tokens I do want to show you. So you can see right here, Axie Infinity, right? They also do like pre-sales and such too. So you can also get in on these claims. And like if some people, they do like get these tokens for really cheap, but I'm gonna see how much was it when it first came out, right? I don't see it, but I think they were like those tokens when it first came out, it wasn't worth a lot, and a lot of people just thought, okay, I don't believe in this token, and they just dump it out really quickly. So you can see, right, 0.0037 BNB. I'm just gonna quickly run it on CoinGecko first, show you like how much they were worth this much in BNB. So like I think it's 0.037, right? I think that's the amount that it was to start off. Let's pull that up just to confirm first. Okay, so Launchpad, where's the Launchpad? Oh, it's right here. So yeah, so Axie Infinity token, so 0037. I was listing it at the zero. So imagine getting like tokens like Axie Infinity token like at $1, almost like $2, right? AXS. So like yeah, and now it's worth like $71. So there are some advantages out there, right? Sometimes the tokens you get from staking you can keep, and it could go up in value, right? In the case of Axie Infinity, in the case of some of these other tokens right there, right? And other times some of these tokens may not be worth anything, and it's a gamble at the end of the day. And you have to decide like how you want to go about. You have to consult your I guess passive income strategy, right? Do you want to liquidate your assets right away, or do you want to keep it for like a year and hope that it will go up in value? Or maybe you want to do like a bit of both, right? 80-20, 50-50, 70-30, whatever, right? So whatever it is, like make sure you do your research and know what you want to do. All right, and then yeah, so let's get back here. So we just cover centralized platforms, right? So the biggest risk about working with centralized platforms is especially with platforms like Binance, right? You may have heard about like regulatory concerns, right? How a lot of governments, a lot of regulatory bodies they're going after Binance right now. And what's not to say that they'll go after other platforms as well too, which could be true, right? Because a lot of these platforms, they do have like an address. They do have like the reason why they're centralized is because it's all based upon like one website, one server, right? And if the SEC decides to go after them, right? If the website goes down, like whatever you have staked there, like could be lost. So that is the biggest risk that you could face with a centralized platform, right? And then next up is the area of working with decentralized platforms, right? So these are platforms like Uniswap, right? Like Axie Infinity, like the ones that we just went over, right? We just went over at the beginning of this, before we start this presentation, right? So you have like platforms like Aave, right? You have platforms like Uniswap, right? You have like platforms like PancakeSwap, PancakeSwap pools and such, right? So these are like platforms where you can you can provide like the tokens, whatever tokens they ask for, just like what we were showing you how on the Binance network, right? They also have this on a decentralized platform, meaning you are interacting with smart contracts. And the difference between smart contracts and centralized website is if the SEC decides to go after PancakeSwap, right, they can take out the website, but the smart contract right behind it still exists. It's still on the internet. And if you have money locked up, you can always interact with the smart contract on the back end and get your money out. Or sometimes you may have other people, right, other anonymous figures making copycat websites, right, with the same smart contracts, right? So you have like different, like I guess satellite websites, right? So and this is very similar to how BitTorrent, right? You have like a BitTorrent works, right? If you're not familiar with BitTorrent, it's basically file sharing, where you have a file that's online, and instead of even though like the download site may be down, the file is still on the internet, right? And as long as you have the address to that file, right, you can still download it, right? So that's the exciting thing about decentralized like staking platform. So let's take a look at some of these pools right here, right? Or farms, right? Pools and farms. So the difference between farms and pools within the DeFi spaces, they like to call these farms because a lot of times you do have to like pair like tokens. You have to like buy like 2 different tokens and stake them together, right? So for this case, you have like cake and BNB, right? That means you have to buy equal parts of cake tokens and BNB tokens. You have to buy them both, combine them together, and then like stick them in. And by doing that, like you get they will offer you like 51%, right? And you may ask, okay, so what are they doing with the cake that you send them, right? How are they making you this return? And the answer is when you put in cake and BNB tokens, right, and you send it to the smart contract, right? The smart contract serves as like an ATM service, right? So you could see like people who have BNB tokens and they want to get cake. They go to that smart contract and they say, hey, I want to trade token A with token B. And for every swap, the smart contract takes a cut, right? Just like any other any like services out there, right? You take a service fee, and the smart contract gives that cut, right, to all the people like who have been like providing the tokens on the back end. So this is where they're making this money, right? It's not like not like these Ponzi platforms where they take the money from the later people. They actually are making money. There's demands. There's use cases and applications, and that's how they're getting you the value. And for that reason, right, this is why a lot of people are excited about these projects right here, right? And this is one few examples of them, right? I mean, like you see, like some of these they do have like very high APR, right? And it's because there's a lot of demand, there's a lot of transaction, there's a lot of people like switching between these tokens because for this one, I believe Scale is a blockchain game, right? So you can imagine like people who are addicted to this game, they're going to want to buy a lot of these tokens. So there's a huge demand, right? And for those who are like part of the guys who are like providing the liquidity, right? It's like as if like you own like a small piece of the ATM. So this is the exciting about farms right here. And then pools, right? It's pretty similar to what I was showing you on the Binance Launchpad, but instead of a centralized website, this is decentralized, right? You are interacting with smart contracts, right? And you're getting returns like 70%, 60%, so on, right? So the returns are pretty good, right? And when you're working with a decentralized platform, when you're doing anything to do with liquidity pair staking, the biggest risk you could run into is the volatility risks of the tokens, right? Imagine if you get into any of these platforms, right? they ask you to put in cake, right? But how do you know if cake is going to be worth $26 like a month from now, a year from now? Anything like these tokens are way smaller than the top tokens. You're working with like small caps. These are small tokens. These are tokens that could be very volatile. And unlike like on Binance, right? Binance, you can actually put in a BUSD, which is like a stable coin. Right? Stable coins will always be 1-to-1, right? So you are working with a very like something that's very volatile, and you could run the risk of if you, let's say, suppose you bought like $1,000 of the tokens, right? Or $10,000 a token. There's no guarantee that this $10,000 worth of cake may still be worth 10,000. You may lose a lot. Right? It may drop down to like 5,000. The flip side could be true as well too, where it could go up to, like where if cake has a lot of demand and the price goes up like a year from now, you could make a profit. So this is the risk, the biggest risk that you could incur. And then you also have other risks, including like platform risks, right? As which we talked about, right? A lot of these are like, each of these, right? They are like smart contracts, right? You can see they are like smart contracts. You can view the contract. You can see the contract behind it. And just like any contracts, smart contracts and codes on the internet, they could be hacked. And there has been instances of hacks, right? I think we started off the conversation, the whole session talking about poly network hack. So these could happen. So this is the other risk that you may have to be aware of. So yeah, so these are just some. So this is just quick talk about like liquidity pairing staking, right? And we sort of also talked a bit about like a farm, I guess farm projects, right? And then I also mentioned about like two parts, right? Staking of stable coins and hodling farm tokens, right? So for hodling farm tokens, so this pancake swap is, I mean, you could arguably say that it is like a farm token right here. It's a pretty old farm because it's been around for almost a year, but you also have like new projects coming up, right? You have like new farms that may be popping up, and they may offer like crazy like returns, right? I've seen some websites like or some people call farms, right, where they offer like 1,000% APR. But the problem is, whatever token you put in, is I've seen some where I may have seen some projects where they have like they'll tell you to, hey, buy our token, buy our farm token, and if you stake our farm token on the website, we'll give you like 1,000% a day. But the problem is, the token loses 99% of value within the hour. And it's like a huge gamble. I've seen people losing like thousands of dollars, right? Just because of the greed, right? They think that, oh, I see a lot of APR, I'm going to get in. But you have to be aware, like whatever like you put in, like it could lose a lot of value, right? And this is why I'm like going with new farms is not for everybody, right? There's in the crypto space, there's a term for that. It's called aping into new projects, and there are a lot of people who do ape into these projects, right? They'll go on like Telegram chat, so they go on like forums and such, right? Or someone would post on like Google and say like, not Google but Facebook, and say, new farm just launched, 24 hours to launch. It's only like whatever, like it's you can make like 100,000% like a year, but these projects, they're going to flop. The bottom's going to fall out, and you're going to lose because most of the times it's the project creators, right? They would give themselves a lot of this token, pre-mine a lot of tokens for themselves, and then they'll dump it onto everybody who bought it. So yes, so this is just a risk you have to be aware of. And yeah, before I jump into stablecoin farming, I just want to see if you guys have any other questions. Anybody want to like feeling lost, or you guys have any questions you want to ask before I move on to stablecoin farming?
If Chris can talk about the projects he's doing on crypto, like is he creating new cryptos? I don't know when he can talk about that.
I've never created any projects. I've invested into projects.
I just want to know exactly what you're doing because it sounded interesting on previous calls.
In terms of like staking or what specifically?
In terms of the projects that you're in and create or new cryptos out there.
Oh, I see. So
involved in projects. So I just wanted you to. I was just curious.
Yeah, for sure. And again, before I say any of my projects, it's not financial advice, of course. Please do your own research. Cryptocurrency is always high risk game. So, I mean, my top 5 holdings are like Ethereum, Bitcoin, Cardano, Thorchain, and Polygon. Ethereum and Bitcoin are the 2 biggest mover in the spaces. Everything follows Bitcoin. So it's just natural to have some sort of Bitcoin. The reason I have Ethereum is because basically all of DeFi, most of DeFi and most of the NFTs are built on the Ethereum blockchain. I have Cardano as just like a competitor to Ethereum as the smart contract play. I have Thorchain because a lot of the dexes right now, so for example, for Uniswap, when you want to swap one token to another, it's only on the Ethereum blockchain. So the reason I have Thorchain is just because you can swap it from many chains natively between chains. So basically it's like Uniswap on steroids because you'd be able to swap between not only Ethereum, but for example, once it integrates Avalanche, you could have like Avalanche to Ethereum or to whichever chain you want, right? And then the last one, that's my 5th largest, is Polygon, which is just a layer 2 suite scaling. So basically it's just going to help scale Ethereum with faster transactions and low cost transactions. Those are my 5 biggest bags, but again, do your own research. But personally, I'm just looking for projects that actually have user adoption, a real use case, and mostly like community members and a sense of community. Because if you have a lot of these projects will start and there'll be a lot of hype, but then they die down because they have no use case. So the projects die. What's that one blockchain like Tron? That's a pretty bad one. That was apparently pretty popular in the last run. I wasn't here for that one. But a lot of these blockchains we call them ghost chains because they don't actually have real, or not real, but they don't have much user adoption. And basically, if you don't have user adoption, you're going nowhere, right? So that's basically what I'm doing.
So I think Warren was talking about Ponzi scheme. So if you want to see a Ponzi, this is actually one I just found on Telegram. So someone just shared this, spammed this to me and say, hey, there's an Aladdin theme like farm. And I can tell you like this, it's going to be gone like within like 2 weeks. 2 weeks, one copyright infringement, right? They're copying stuff, right? And you can see, I look at this, like 5 million APR, right? But the condition is you have to buy their token, their monkey token, which is $3.60.
Oh, that's cheap. Where can I get a monkey token?
Yeah, I think it's cheap, right? And I can tell you that I buy it like by tomorrow, it's gonna be worth like 3 pennies. If not even worse, it's gonna be worth nothing. Because what's gonna happen is when they have like this high return, right? That means they're gonna be printing out a lot of monkey tokens. Like you buy monkey token just to get monkey token, and they're gonna print out a lot of monkey token. And usually you could expect the whales, not the whale, but those who are friends of the creator for this platform, right? They probably have the monkey tokens already. They're gonna dump the tokens right at opening. Right, and they're gonna dump it, and they're gonna be making like thousands, if not hundreds of thousands of dollars off people buying. And this is what Ponzi is. So like be careful about these projects. I would not recommend anything that is like new and from like anything that's new and also from people. Not of people. I mean, they don't show you the people behind it. This is an anonymous team, anonymous project right here. So So be careful about that. Don't fall for like projects like this. It's probably safer to go with established projects. And the saying goes that if it sounds too good to be true, when you see something like 1,000% like annual return, it's probably too good to be true. They're gonna dump onto your faces. So
yeah, and James had a good point. He said, you know, a lot of these are Ponzi's, and you are correct. But you said sticking to researching the top 100 on coinmarketcap.com and you will avoid Ponzi schemes.
Yeah.
Well, just because it's in the top 100 doesn't necessarily mean it's a good project, right?
yeah, if you've been around in 2017, the numbers, I think number 8 coin or number 16 coin, like back in 2017 was BitConnect. Right, it actually was in the top 20 list, if not the top 10 list.
Yeah.
And so yeah, just because they are the top list doesn't mean they are legit. And yet,
Right.
so just be careful.
Absolutely, guys. Hence why I said researching the top 100. But yeah,
100%. Yeah, I just wanted to clarify that because, like, for example, like ICP is number 19, but like it went to like $1,000. Everyone bought it, and then now it's at like $76 because all the founders just dumped all their tokens. So you have to be really careful about, like, this is why it's really important to read the white papers for every project you invest in, especially the tokenomics, right? Because if you see, for example, a project that's launching, let's just say it's a new project, and like half the tokens are going to like the founders, that's a huge red flag. Because like what's going to happen is when it runs up, all the founders are just going to dump their tokens if it has no vesting period, and then you're going to be the one left holding the bag. So that's why it's really important to look at like all the white papers, tokenomics, the founders, the community, the talk about the project, and always just be able to make your own decisions. Don't just like follow someone else's advice just because they said it was a good coin. Like, even if I say, you know, I bought this project, doesn't necessarily mean you need to go buy that project, right? You need to do your own research, then you need to make your own decision, right?
Yeah, absolutely.
And yeah, just tokens and tokenomics. You actually can find this information. If you go on the white paper, you'll be able to find like how the tokens are distributed, right? They have one for Aave. It's well, pretty established project. US, this is more about how they talk about it, but with this, but a lot of times they give you like a pie chart, right? And they show you like percentages for different, right? Sometimes they will show that the team takes like 20%, right? And other projects may have like the team like claiming like 50% of the tokens. And then you want to question like, is it even worth it, right? If half of the tokens are controlled by like one person or 5 people, right? They can dump it on. And we have like some projects out there, like projects like Dogecoin, projects like Shiba Inu, right? How someone with a lot of like a high percentage of tokens, like they could tank the price just by dumping it. So you have to be careful about it. Like, do your research, like before getting into any of the farms, right? So let's see.
There's a question about will you be providing a list of these resources, white paper tokenomics? So the easiest way to do it is, for example, like Aave, right? Like if you go to aave.com, and that's Aave's protocol, and usually on all of these blockchains, or you can Google it. So on any of the blockchain websites, there's always a section that says like documents, and then what you want to do is you want to click into the white paper, and then if you look at one of those white papers, no, that's the like actual white paper. Sorry, I meant like the like the light paper. It's go back to the Aave website. It's actually in the top right. Yeah, that's like the technical white paper, like the blockchain actual like how everything works. I don't understand any of that nonsense.
I understand like the nuts and bolts. Probably the main thing I look for is if you're planning on just hodling, it's probably a good idea to go over the light. They usually have like a light paper, right? Like a light version of the white paper. But if you are planning on using using the protocol, right? For this, you want to take out a loan with Aave, right? It's probably a better idea to like go through the whole thing to understand like how does liquidation work, right? How does flash loan or tokenization work? I'm trying to see if there's like a pie chart here, how their tokens are distributed, but sometimes they may not show it and they just put it on their blog or Medium. And I think maybe the case for Aave, their white paper. Nope, they don't have that. Usually, if I type in team, and then I may come across it. But yeah, but this is just field platform. Yeah, and yes, if you want to be safe, it's best to read everything. If you don't, if you want to be safe, best to read everything. The less you read, the less I understand, the bigger the risk you may face. And yeah, so white paper meetup group, that could be something to do. I probably will be expecting to be doing some summaries of white papers at future sessions, or maybe like on my channel. And I'm pretty sure that Christopher may be doing that on his.
I do summaries of, like, for example, a project. Like if I do a full YouTube video on a project, I don't like go over each aspect of the. Well, actually, you know what? In some of the videos, I have done that. So some of my YouTube videos actually do have like review or like a high level overview, non-technical. I'm not a developer. Of white papers and essentially the whole project. That's usually what I'm doing in in my YouTube videos. Yeah, it's really important to be able to understand like what you're investing into, or else you're not going to know what's happening, like, and why certain things are pumping and why certain things are dumping. All right, that's why it's important to.
You guys are doing a brilliant job. I helped smarting us up. Thank you very much. You guys are doing smartening us up brilliantly. I've had a stroke, guys, so don't worry about me.
Thanks, Warren.
Yeah. So just want to just maybe like by show of hands, or you can just type in the chat, right, to see how many people here figure out how to use MetaMask, basically like a smart contract wallet. So you can see this box app right here. This basically browser wallet, crypto wallet on my Chrome browser, and this is the tool, the app, the wallet you use to interact with all of these projects out here. Like all these projects, let's say let's go on Matic, right? Let's go on Matic right here, right? Suppose I use Matic, right? It'll ask you like, how do you want to connect, right? And you notice how I just press, I have a browser wallet, let's connect there, right? And suppose I want to, yeah.
Are you gonna send me 1,000 stable coins, Ed? I'll send you 2,000 back. That's a scam, by the way, guys. Yeah. Please don't ever send anyone any crypto.
Yeah, don't send anyone. But you can see, I suppose I want to, let's say, make a deposit, right? I can't do that because I have zero balance. This is my demo account. But how this is whenever you whenever you interact with the website, you're basically interacting with the smart contract. The smart contract will be a contract that says if you deposit every dollar you deposit, you get whatever percentage, right, over the course of 1 year. Right. So that's how it works. So you can see, right, and the only way you can interact with it is with the wallet, right? And the wallet can set like requests. I want to withdraw. So it's like your phone interface, right? How you interact with your bank website by using a phone. You do the same with an app like MetaMask. So just want to see show up, right? Everybody here, like whether you guys know how to do that, or maybe you may want a demo in the future on how to set that up. So James just gave a phone stuff, so you know. Anybody else?
So I have a
If
question.
you're interested, what I could do, Kristen, I could do is you could do like a demo session sometime in the future. Probably not tonight, but maybe like a boot camp or demo session where we'll show you like step by step, right? Like where we start with like a blank browser computer with no like wallet on it. We're gonna show you like how to set up, how to install, how to send like your some crypto to it. Maybe with my Bitcoin. How can you send like tokens to a wallet in the network? You can see it right there, right? They are all like individual networks. So you can like Binance is one network, Phantom Opera is another network, Avalanche is another network, Matic is another network, and each of these they work with different tokens and they have different projects. And we did show at the beginning that some of these networks they are more lucrative than others, and those who are able to get the most out of this are the people who know when to jump between networks.
Your audio is kind of cutting in and out, Ed.
Let me close my maybe. So so those who are able to make the most right within the complex space are those who know how to like when to like jump from one network to the other, right? And this act is called yield farming. Basically, you are like cultivating you're moving, right? You're moving from one network to another network, right? Or from one platform to another platform. And this is how some people have been able to make like thousands of dollars like every month, right? Imagine if you talk dropped a lot, but you have like
Anybody detect bad audio like I do?
Yeah, I can't really understand what he's saying.
Ed, your audio is bad.
let me close up the windows. I actually have like windows up right now, so okay, so it's just a lot better.
I can hear you now, I think.
Yeah. So yeah, and those two both.
There you go again. Maybe it's
Yeah, sorry, Ed, we can't really hear you, bud.
All right.
And we
Well,
want to hear you.
why don't you restart your? I don't know if you restart the Zoom if it'll kick us all out.
It's more like fact that I have a lot of things. So let me close a bunch of things up. Just opening up all these platforms to show you guys slow down my computer already.
Yeah. Well, while Ed's sorting that out, do we have any other questions? Like, if you have any questions about like, my first investments, I'd be happy to share that, or like what my journey was. I'd be happy to answer any other questions that anyone else has, especially if you're newer to the space. Always try to be nice to other people that are learning, because, as other people get into the cryptocurrency space, that only benefits you. It doesn't make it any worse. Any of you day trading? I don't day trade. So that's when Mitchie is saying day trading, that's like using leverage mostly to trade in and out of positions on leverage. So like you can long and short. So basically, if you're longing, you're expecting Bitcoins to go up by a certain price, and if it hits that price, you make a lot of money, right? And then opposite, you can short it, and if Bitcoin goes down to a certain price, you also make money. The only caveat I'd say about day trading and using leverage is that it's very risky and it's easy to get liquidated, right? So for example, if you think Bitcoin is going to go up and it actually tanks really far, you can get liquidated, so you can lose your entire position. So I would just say, especially if you're newer, I wouldn't use any leverage. I personally don't use a single ounce of leverage. I only spot trade, so I just buy it and I either hold it or I sell it at a later point.
Do you do CFDs for spot trading?
I don't know what that is. What is
Contract
a CFD?
contract for difference, like a contract for difference broker. I guess like CoinGecko. I don't know if that's one.
CoinGecko is just a tracker. Like it just tracks your portfolio.
Okay, yeah, that's better.
I use CoinGecko personally for my portfolio. Yeah.
The contract for difference is like you're not buying the actual crypto or you're not buying the actual stock. You're just betting against or for it going up or down. So like
synthetics.
So like Gemini is another broker that's a CFD, for example.
So in the DeFi world, it'd be like synthetics, or in Terra,
right?
Mirror.
Right. Oh, right. So you're using right. So it's essentially okay.
You got market maker that doing both sides.
Yeah. Those definitely exist within cryptocurrency. I don't personally use any of those, but
you're actually owning the cryptocurrency.
Correct. Yeah. So like
CFDs,
for example,
you're not.
Yes, I own the cryptocurrency straight up. Like I don't. No one else owns my crypto. That's correct. And something to note about that is, like, for example, if you put your coin, let's say you put like your Bitcoin or your Ethereum or whatever coins you have on a centralized exchange. Let's just take Binance, for example, right? Or actually, you know what? Here's a better example. Coinbase. If you saw the news from the last couple of days, basically what happened was a bunch of Coinbase accounts got hacked. And the even through two-factor authentication. And so they lost all their crypto, right? And Coinbase can't do anything about it because you can't reverse transactions on the blockchain, right? Once you send it, unless they send it back to you, it's gone forever. Like for example, I sent like 250 Polkadot tokens to the wrong address on accident, and then whoever that person is, they just got like $400 in Canadian worth of Polkadot tokens.
I didn't hear that about Coinbase. Interesting.
Yeah, it just came out. I just saw that like yesterday. Someone said I heard someone lost 100K. Yeah, I know that. Like I don't know anyone personally that lost anything from Coinbase, but I know a bunch of people like lost money from Coinbase. And there's a saying in cryptocurrency, and the saying is this: not your keys, not your crypto. Right. So if you don't own the private keys to your cryptocurrency, you don't actually own the crypto. Right. Like, for example, if Coinbase gets hacked again and they happen to hack your wallet, your stuff is gone and there's nothing you can do to get that back. Right. You can't sue Coinbase or anything.
Yeah, I could dig a bit into the Coinbase hack. The reason why the people got hacked wasn't because Coinbase got hacked. It was actually because the people, their phones, the computers, right, they got hacked. Right. So
really?
Yeah, so the hackers happen to have access to their Coinbase account already, right? I guess maybe like the computer had like a Trojan virus. They've been on too many websites they should be on, right? And also the other part was those users, they did not have a two-factor ID. Meaning the hackers can just log in with a password. They didn't have to like check your phone to see that you send like a code like to your phone, right?
Yeah.
So that's why those people got hacked. It's actually most of the times their fault for not setting the security settings, and like more the reason why I do encourage everybody to make sure you do like two-factor identification, right? Like whenever you log in, I make sure they send like a text to your phone, right? And for Binance, they actually do 3 factors. They use they send them whenever you withdraw money from Binance, they will send you a text by phone. They send you a second text, another code, right, to your email address, and then they'll send a third code like through Google Authenticator. Meaning you need to get 3 sets of passwords just to authorize a withdrawal. And this is where I think this is like a rock solid. Like it's like the chances of a hacker like getting access to your phone, your email address, and and a Google Authenticator. It's very slim.
I would say that if you have like a smaller amount of money in crypto, you're probably better off just using a centralized exchange. However, if you have a larger amount in crypto, like some of us probably have a little more than we should, I would recommend what Warren had mentioned. So either like some sort of what we call hardware wallets, so aka cold wallets, so like a Ledger or like a Trezor or any sort of like cold wallet like that. And you can combine that with, for example, MetaMask, which is a hot wallet. When I say hot, I mean it's online, right? So you can access that through the browser, and then you can hook that up to your ledger. So for example, let's say I have 10 ETH in my MetaMask, right? And let's just say for the sake of example that somehow they get access to my MetaMask password, right? If they try to send a transaction, let's say Ed's the one who hacked my account, right? And he's trying to send 10 ETH back to his own wallet. He can't actually send my ETH to his wallet because I have my hardware wallet. It essentially just holds the private keys to your crypto. So whoever owns those private keys is essentially who owns the crypto. So it's just essentially more security for yourself.
Yeah, because whenever you want to send a transaction that is backed by a ledger device, you do need to like pick out your hardware wallet, and then there's like a screen, right? They'll say that someone wants to send this. Are you okay with it? And then you have to press like I accept on the hardware device. Yeah. Then they'll send. So it gives like that one extra layer of security, and that's why I personally recommend anyone to, if you don't have a Ledger Nano, probably a good time to get it. And also especially in times where it's no longer feasible to be on exchanges, right? Some of you may be aware that if you got my email this week, right? I sent an email to everyone, and everyone on our mailing list know that Binance, right? They are requiring people to do a KYC like requirement, right? Meaning you have to send them your driver's license, your passport, all these other documents. It may sound nice, but who is to say that somebody at Binance decides that their bonus is not good? They decide to just copy all the files of everybody's passport information and sell it on the black market.
It's the same as crypto.com, Ed. Crypto.com is
yeah, crypto.com. I mean, these are all centralized exchange, right? And when it comes down to like providing, like personal information, right? Like you have to be careful about that. I know some people, they're very picky about that. Like they don't feel comfortable like giving their.
You recommend using crypto.com?
Yeah, I mean they're like Binance. Crypto.com. They're just like Binance. They're just a competitor to Binance. But yeah, so this is something to consider, right? And for Binance, right? If you don't know what's happening in Binance right now, because of that requirement, right? A lot of people actually are pulling the money out.
They just offer the ease of liquidating your crypto assets back directly into your bank.
Yeah, pulling it out. So you have like 10 altcoins, right? They're actually pulling them all out and putting them onto their Nano Ledger, their hardware device. Because they don't want to on the exchange. The exchange said that they have like 2 months to pull out, or they'll lock the funds. So they're just pulling out the money and sending it to their hardware wallet for long-term storage.
Or you can just trade peer to peer to kind of cash out.
You could, yep.
Yeah, but yes, and so that's probably the biggest development right now, like within the crypto space. A lot of people are just pulling out, and it gives people more the reason, right, to start learning about self custody. You want to learn how to keep your coins, safe, and how to store them.
Fun fact, since we're talking about MetaMask, is like, has anybody used the swap feature on it? Like you can swap coins.
I haven't actually. I've seen it, but every time I look at the fees on the swap, it's usually higher than Uniswap.
Yeah,
it's still using Ethereum. But every time I look at the swap feature, I've always seen it be higher than Uniswap.
Yeah.
At the end of the day, they're fees, but like, I mean, wait until whenever 2.0 launches, and hopefully that is all going to be substantially lower. And then MetaMask, I mean, you don't have to do anything outside of MetaMask, really. If you want a different coin, just boom, and it's all within your wallet the entire time. You don't have to deal with any of these centralized.
If there's let's say, for example, because MetaMask is only Ethereum. So for example, if you have a coin that's outside
it's not
of
only
Ethereum, well, it's like Ethereum and like what is it, BSC and like Matic.
You
want to jump
Avalanche. Oh no, it is multi. Sorry, I don't know why I thought that for a second.
You want to jump over to Solana, it'd be a little more difficult, or Terra.
Yeah. See, there are certain projects that aren't on MetaMask. That's what I meant to say. You are correct,
no,
James.
totally. But that whole paradigm is going to be a thing. Like MetaMask is just one example of dozens of
chain liquidity is something that's really there's a lot of research and
there is.
Yeah.
That's one of the largest problems in crypto. So for example, you have Ethereum, you have like Cardano, you have like Polygon, you have like Avalanche, you have Solana, you have all these different blockchains, right? And then one of the biggest things in cryptocurrency that we're trying to solve for is called interoperability. All it means is you want to be able to connect all these chains. If you want to think about it, it's like a highway that goes to all the different roads. So you can just connect all of the chains, and you can swap liquidity between all the chains. You can swap. That's one of the largest problems, and that's why we don't have a large cross-chain DEX yet. The key word was yet.
Yeah, right now the liquidity is just pretty fragmented.
It is.
Which is a huge issue.
Yeah. Majority of the liquidity is on Ethereum right now. Despite the high gas fees, people still go there because there's still a lot of projects there, right?
I actually work as a blockchain dev, by the way.
No way. Which ones, James? If you don't mind me asking.
Yeah, so I work at Notional, which is Notional Finance. It's a Ethereum fixed rate lending protocol. So if you think about Aave, Compound, these are all variable rate lending protocols. And Notional is fixed rate. So it's using maturities. And so we're about to launch V2. Now, the thing is, a lot of these projects, if you look at Aave and Compound, they're moving quickly, right? But the problem is all they're doing is they're taking their code and they're recompiling and put it onto Polygon or Avalanche or something. That's going to cause a lot of liquidity fragmentation, right? It's going to be like liquidity is going to be everywhere. Like if you on Polygon, the Aave is going to be totally different when it comes to rates and things like that. It's a tough problem that
it is.
It's going to take time to solve, but I mean, I've been with DeFi forever, and
a lot of these projects, their main focus is branding. It's more about branding. It's more about getting more user. A lot of them they realize that like Ethereum is hitting saturation. People are starting to flow to other projects, other chains, right? And that's why SushiSwap. I think Aave and SushiSwap, they're probably the biggest two, right? That like to start like a satellite projects, right, or satellite offices, right, within other chains, and with that they can take all the total value locked in Ethereum and Phantom and all these other chains and combine together and say, look at us, we're pretty big. So that's what a lot of them are doing right now, and I mean, like, it's can't really do too much about it, but yeah, if there's a way to combine them all, or even just allow people to like move liquidity from one to other without.
I have all these bridges. That's another issue.
There is a lot of bridges, like from Solana to Ethereum, Terra to like Solana. There's so many bridges, right? And those are potential points of failure when you're trying to move from one network to another, right?
I was gonna say, like, when you talked about like researching projects and how you're supposed to read the white paper, I'm a little more hardcore. I actually have to read the code.
That's because you're a dev. Like, you have to understand. I guarantee you, no one else in here would understand. Well, like, if you talking about the smart contracts, you're probably the only one that's gonna understand anything you say.
Is it a clone like FarmBridge? I actually looked at the FarmBridge contracts, and they're pretty good. So I would say FarmBridge is a pretty solid project.
Yeah, but it is a very interesting problem that we have to solve for, right? Like the funny thing is that, for example, Uniswap, most of us use Uniswap, I would say, if you're using a decentralized exchange, right? But the token itself for Uniswap has no value. Like it doesn't do anything. But if you compare that to, for example, if you're looking at SushiSwap, they're not only are they multi-chain, but they're also building many dApps and applications on top of SushiSwap. They're building NFTs. They have lending and borrowing already. They have farming. They have staking. They have governance. They just have more things going for them, and they're more undervalued than Uniswap in my opinion. If you look at the stats, it's the same. But I see a question here from Michi that says, "Can you please explain the difference between blockchain networks and bridges?" Oh yeah, so blockchain networks is just like for example, Ethereum and Cardano, or like Solana and Avalanche. So like the actual projects themselves are all the blockchains. The bridge is what we're referring to is what connects the two networks together. So for example, if you want to bridge from Ethereum to Matic, you have to use a bridge to move your assets from one network to the other. You have to bridge them first before you can use them on the other network, essentially.
So I'm going to do a visualization of like how like a lot of these crypto networks like are like all over the place, right? So yeah, so you have like a picture of this as like I like to think of this as like you guys may remember the TV show Game of Thrones, right? You have all these other nations, all these kingdoms out there.
That's
right?
an awesome show, man.
Yeah, you have like the Kingdom of ETH network. You have like Binance Smart Chain, and then you have like another kingdom right here, right? You maybe have a kingdom for Avalanche, right? Each of these kingdoms, right? They have their own currency. So for ETH, right? Obviously, the main currency, right, is ETH, right? You spend ETH to do business, right? If you are in the Binance kingdom, right, the main currency there is BNB tokens. And then likewise, in Avalanche, right, if you want to get anything done, right, you have to spend AVAX tokens. So each of them, they have their own tokens, right? But the nice thing is that within each of these networks, they do support other tokens. So you may have tokens like transaction token. So you have transaction token, that's for this case ETH, right? But then in each of these network, right, you may be able to like interact with a project, right? And let's say provide like let's say a Bitcoin, provide like a Cardano and other tokens, right? So anything that's not a transactional currency token, you can actually, if they do support it, right? The term is called wrapping, meaning you take like let's say for this case, right? You take a BNB token, you can wrap it up in ETH code, right? And basically it's like an ERC token. So that way, if they have like let's say a platform, right, or they have a service that accepts BNB, right, you can actually provide BNB within the ETH network, right, by providing a wrap token, and you have like in like projects like lending platforms, or in projects like right, they may say that within the ETH network, right, you have these markets out there. They say, hey, we'll take your BNB, right, and we'll pay you a stable coin, right? So that's a nice thing, right? And each time you do a transaction, you pay ETH, right? That's why they call gas. Now we talk about bridges, right? And how they form, right? So suppose you have a lot of ETH tokens, right? You have a lot of ETH tokens, and you learn that Binance has I'm going to mute you for now, James, because of alarm. But let's say on Binance, right? You come across a project, right, where they'll give you a loan. They give you a collateralized loan, meaning if you happen to have a lot of ETH around, right, you can actually put ETH on the platform and take out a loan against that ETH, right? But the only problem is your ETH are located in like on here, right? Your ETH are locked up in ETH network, right? What you have bridges, right? You have these bridges, right? These services where they'll take your ETH from one network and they'll move it over here. Moving is a bit simplistic. There's a whole process where they wrap it up in the code of the other chain, right? But the whole concept is you can move it from one to the other, and the services that do this are called bridges. And some of the limiting factors of bridges is not all the bridges that may be willing to transfer every token, right? Usually bridges, they transfer the most common tokens, usually stable coins, Bitcoin and ETH. And if you're lucky, they may do more, right? And as a result, a lot of people, they may have to like liquidate whatever tokens they have, right? If they have, let's say, a Safe Moon or like a YFI, they may have to liquidate this for a more common token.
And you're talking about conversion, right? Conversion between Ethereum to Bitcoin, Ethereum to whatever, like between cryptos.
They have to convert it to a more common token so that they can send it over the bridge.
Yeah. Usually there's some sort of, that's why when he says wrap token, usually it's like it's Ether, and then usually it's Ether to something else, but it kind of depends on which chain you're going to and from. The problem here is that, for example, let's say ETH and Binance have a bridge, right? But let's just say, for example, Avalanche doesn't have a bridge to anyone else. That's a problem, right? Because all that liquidity is now sitting on Avalanche, and it can't actually bridge into BSC, bridge into ETH, or wherever it needs to go, right?
So you can think of these different chains as almost like different countries, right? So
they are. That's why you
got it.
Right, and then like think about how you're sending money across countries, right? So you give typically some facility has, or banking institution has offices in both countries, right? So in this case, they have smart contracts on both chains. That's what they do, right?
Yeah, usually. So
you give
swap and such.
Yeah, you give tokens to one of the offices in your home country, and then they make a phone call, and then they release the funds. On the other chain after few confirmations. That's typically how it works.
That's pretty much it. And not all bridge services may exist across like every chain, right?
A lot of them are centralized.
Like, maybe like half 100%. You have half a dozen chains out there. You have like Solana, right? And then like they use like Sol, right? And then you have like I think we mentioned about like Luna.
Like
Terra, right? They don't use UST and Luna. I think Terra is an interesting one. Where Terra's is an interesting one because their currency, right, which is both UST and Luna, and UST is actually pegged to the US dollar. So one benefit about Terra is actually whenever you do a transaction, you actually can calculate, like you can actually see right off the bat, like how much are you going to be spending, right, in value, instead of like having to convert back to US dollar. So they do have that, and it gets more messy, right, when you have more, and then you don't know like which one is connecting to which, right, and then everybody, or not everybody, but a lot of people's favorite, right, Cardano. We have a lot of like there are more and more people who are like going crazy over like the Cardano one. So so you have a lot of bridges, and eventually that becomes like very messy. It's hard to keep track of all the bridges. And
they're going to have their own HUSD stablecoin on Cardano as well. They're launching it.
They're going to be launching one. That's correct.
Yeah.
So you can see how there's all these different like blockchains again, and we lack bridges and we lack interoperability. So that's one of the largest problems that we're working on solving, right? That's why we're building bridges. That's why we're building multi-chain protocols. We're building multi-chain dexes, so you'd be able to trade between let's say I have Ethereum on BSC, but I want to swap over to Solana. You could do it all in one go through a certain dex, for example.
Bitcoin might be even more problematic, right? When you talk about crossing, because a lot of these chains are Ethereum compatible chains.
Correct. They're EVM.
Like for example, like if Binance Smart Chain, Polygon, right? They're EVM compatible chains. That's easier. Solana, Terra, they're a little more complicated. Terra is a Cosmos chain, I think, and then you have Bitcoin.
Bitcoin doesn't have any smart contract capability yet.
Yeah, Bitcoin is the old fogey.
Yeah.
There's actually a question for you, James. Someone was interested about hearing about, the project that you work for.
Oh yeah,
Notional.
yeah. So
I just,
yeah,
I was
Can you,
looking
speak,
at
can you speak a little more about that if you don't mind,
Yeah.
James?
yeah. So this is V1 that you're looking at. So we're launching V2. So Notional is fixed rate lending. So it's so basically you can borrow or lend or provide liquidity at basically at a fixed rate and also fixed term. Obviously, you can trade in and out of your debt position. So we do provide a Uniswap style debt liquidity marketplace for you to be able to trade in and out of your position. But in essence, it's basically fixed rate lending in DeFi. And if you look at traditional finance, 80% of lending is fixed rate lending. There's the variable rate lending is not as popular.
Right.
But in DeFi, the most of the lending protocols right now, if you look at Aave, Compound, I mean, Aave has a stable, if not really fixed rate lending.
Yeah.
And the rate changes every block, right? So that is not very, I mean, you use this for a long time. I've been using Aave since it was like ETH Lend. And I mean, you're talking about like you borrow something and it's like 2% and like a couple hours later it go up to like 20%, right?
Right.
And that's not uncommon. And that is just not something it makes it very difficult to use if you're actually trying to borrow something. And with Notional V2, we actually provide some pretty long maturities. We were talking like maybe a year, 2 years, 5 years. There is an experimental 20-year market. I don't know who's going to be using that. But the beauty is when you in V2, when you provide liquidity in V2, you don't actually have to specify where your liquidity is going to go. Like, right? In V1, you have to say, I'm going to provide liquidity to the 6-month maturity or the 1-year maturity, right? But in V2, it's going to be
right here, 1 month and 6 months right here.
Yeah. In V2, it's going to be you're just providing liquidity, and the governance is going to decide how to basically split out the liquidity across different maturities. And we're actually rolling this out. It's actually quite complicated. The protocol, the smart contracts, they're very complicated. This is.
And so is this project already live as a
so
coin?
V1 is live, so you can use it. We don't have a liquidity mining program as of now. In V2, there will be liquidity mining. So I do foresee, I mean, even without liquidity mining, we're talking like 15, 20 million locked TVL, right? With liquidity mining, I'm definitely foreseeing that it's going to grow. It's funded by Coinbase Ventures and Pantera.
Cool.
So,
that's cool.
Yeah.
What do you guys see as headwinds moving forward? Like, what issues do you see on the horizon of getting more adoption?
Well, in DeFi, the biggest problem with lending is it's all collateralized, right?
Yeah,
so
it is.
That is a big issue. I personally, my job is to handle liquidations.
So you're the one that's like,
I'm the one who actually goes and liquidates all these positions.
Yeah.
So that is actually an issue. So there isn't really this credit system, right? It could potentially get developed. I'm not seeing any promising projects. I mean, a lot of the promising projects are just selling NFTs. They're not really anything legit. I'm not seeing anything right now that kind of resembles decentralized credit at the moment. Another issue is insurance, right? So I feel like DeFi insurance is seriously lacking. A couple projects, nothing awesome, right?
Yeah, you guys, I see that you guys have Nexus Mutual on here. I think that's like the biggest one in the space, but like I've just heard, I can't remember exactly what was wrong with them, but there's a couple of projects that are coming up, but there's nothing like blue chip insurance like in the top 50 projects yet. I don't even know where Nexus is.
Mutual as well, so I'm just curious, like what's the hesitation with it?
It's kind of hybrid. central DeFi. I mean, it does require KYC, so it's kind of weird for. It's not really like, in my opinion, DeFi insurance should be smart contract based and
Right.
shouldn't be
Permissionless
intervention, right?
Right.
Like we shouldn't be asking for any sort of KYC, or there shouldn't be any. I feel like there shouldn't even be any voting, because you shouldn't rely on people to be claims adjusters.
No
right?
voting?
Who's gonna right? Who's gonna actually go and research? It's very tough. So right now you have two ends of the spectrum. So on this end you have Nexus Mutual, that's very much kind of using kind of traditional finance, kind of a way to do DeFi insurance. And then on the other end, you have something called Risk Harbor, which is completely based on smart contracts, and they're trying to automate it. But the problem is it's obviously very new and experimental, right?
It's called Risk
only,
Harbor?
Risk Harbor, yeah. So I mean, insurance, really, the industry is kind of a chicken and egg problem, right? You really need a lot of data for it to work well. But if it doesn't work well, nobody's going to use it, so you're not going to be able to get a lot of data, right? So it's very tough, insurance, and it's being overlooked right now, even though everybody's yield farming and liquidity mining. That's why all these hacks are really damaging, right? Because nothing is really insured, and it's it certainly needs a lot of love right now.
What would be the process as a developer, James? What would be the process of like getting in touch with somebody like Nexus Mutual or Risk Harbor, and asking to implement their network, their token onto, say, Notional? And so when you're clicking into providing liquidity into Notional, you have the option to opt in to getting insurance, because I feel like that is the way in for these insurance DeFi protocols.
Yeah, a lot of these insurance projects are actively doing that, right? Like I think Nexus Mutual potentially is doing that. Also, the Bridge Mutual, I think, is another one where you can, as a DeFi project, you can kind of like the governance can provide insurance for the whole contract, right? That's potentially a way to do it. I feel, but still, you have the claims process, right? That's obviously the most clunky part at the moment. We don't have a lot of evidence or a lot of history to see how it even works. Bridge Mutual recently paid out a claim.
Yep, I'm in that one.
Oh man, it was clunky as heck. I mean, were you? I was kind of monitoring that process because I am really interested in insurance, because I feel like it's a necessary evil in DeFi, right?
It is, yeah.
But it was clunky. Did you vote?
I didn't vote, but I saw that it got paid out. Basically, there was like it was like 60 million, I think.
It was Popsicle.
On Popsicle, yeah. So basically, Popsicle got hacked, and then supposedly BMI covered their insurance. I'm not really sure what else happened, so maybe you can enlighten me, but I'm also in that project.
Yeah, like a lot of times these insurance protocols rely on voting, right? With voting, I mean, it's just a kind of a weird system, because then you need actually people to go and actually research.
Right.
A lot of insurance claims, they're not really that easy to research, so you end up with a bunch of people not voting, right? Or people kind of voting without actually doing sufficient research.
Right. So they could just vote for anyone, and then the claim may go the other way, even though, like, let's say because they did actually get hacked.
Yeah,
right?
And also a lot of these contracts aren't super like watertight in terms of how it's supposed to pay out. Like, is it strictly a smart contract hack? What if it's because of another liquidity issue or something? Like, is that covered? So yeah, there's still a lot of work that needs to be done in this space, for sure.
Sounds like massive potential.
Oh yeah. If you can pay attention to some of these DeFi insurance projects, Nexus Mutual, Bridge Mutual, Insure, I think is another one. Risk
I saw
Harbor.
I saw Shield was actually getting pretty popular. I don't know if you've seen
Yeah,
that
yeah.
one.
There's also Insure Ace.
Yeah, you can. You know what's interesting about Shield, and I'm not personally invested into Shield, but one thing I saw was that you can buy insurance about getting liquidated. So if you get liquidated, you can for some. I don't know exactly how this works, but apparently with Shield Finance, you can buy insurance for that. I don't know how that would work, like in terms of claims, payments, and whatnot, but I thought that was pretty interesting. So
yeah, it's definitely a lot of interesting projects for sure.
Yeah.
Yeah. I haven't looked too much into insurance. I know that it's supposed to protect, like cover your ass.
Yeah, basically.
If anything happens.
Well, we need to accept the fact that there's always going to be smart contract bugs. I mean,
yeah.
Oh yeah,
that's just
100%.
a fact.
Yeah.
You're not going to have bug-free code. I mean, this is sooner or later something somewhere is going to get hacked, and we need to just protect against that, right?
Yeah.
What about like I don't know if who else has any NFTs. That'd be really cool. I love it. I have a couple of NFTs. I haven't aped like 1 million ETH into NFTs, but I bought a couple. I was like, oh, I like this art.
Yeah,
James is smiling, so I feel like he has some. James.
I really wanna. I'm more into like investing, kind of like putting money into like NFT platforms. That's
For an NFT,
so like the pick and shovel place,
like on like the NFT website. You can take any photograph you take and then make it into an NFT, right?
Well, yeah, you could do that. But the question is, are you able to get people to buy it?
Yeah, do people actually understand the idea
Yeah.
behind NFTs? Like why NFTs are a big deal?
Yeah. I think a lot of people just doing this because other people are doing it. I mean, I'm still puzzled. Like, how could a picture of a rock be worth like millions of dollars?
Okay, so here's a way to think about it, right? So in traditional art, there is always the concept of owning the original, right? So let's say you have an artist that paints something. There's always the original that they want to own, right? And you can make like 1 million copies. I mean, nobody really wants to own a copy unless you just want something, right? But if you're actually investing in art, you want the original because that's the one that's actually made by the artist. Now, in the digital space or digital art, there is really no way to tell apart, right, the original apart from all the copies, because you can perfectly copy something, right? So let's say I give you a JPEG. You can make like 1 million copies of that JPEG. Now, who owns the original? You don't know, right? So what NFTs, what an NFT allows you to do is to assign ownership to a JPEG file. Say, now this is the original, right? So people actually want to own the original because I don't know why. I mean, whether or not you like digital art is irrelevant, right? Some people think it's cheap, but I mean, you never know. I mean, it can have value. I mean, the world is pretty big, right? So, but when they invest in digital art, they want the original piece, right? They don't want a copy, because they want to support the artist, or they feel like there's a connection there or something. So NFT really gives you that ability to say that this is the original.
How can you tell the difference between an original and a copy of the NFT?
It's pretty easy, right?
Can verify it on the
blockchain.
Like
copyright.
You can
verify it on the blockchain if you have the address or for example, if I were to show you my NFT collection, I would be able to show you that I verifiably own
good point.
this NFT.
And it's all timestamped. You can't it's like recording your real estate title.
It's here and you can't change it because it's a public. You have to remember that the blockchain is a public ledger. Anyone can technically go and look at any of the transactions as long as you know the correct.
And as an artist, now I know who owns all my art. Even if it gets traded 1 million times, I still know who owns it, right? And that's a good way to track who owns what. And that's another important thing when it comes to NFT. Like right now,
you just copy a picture off the internet and then sell it as an NFT because somebody took that picture originally. Somebody owns that picture.
Well, I mean, that's all. That's the going from legacy to that transition, right? I mean, moving forward, we can do that. But yeah, if you grab somebody else's picture that's already like copyrighted or something in the traditional space, and then you make an NFT and claim that to be yours, yeah, I mean, right?
At the end of the day,
Forward,
it's the blockchain. Like you look at you look at the NFT, there will be like a part of the code or the data that says like who was the one who made it, right? And they'll give you an address, right? And if that address is the original creator, right, then that's how you verify.
Somebody looks at a picture, they're not going to go and take the steps and say, "Oh, who knows this? Who owns this NFT?" I mean,
they will if they decide to do something with it, right? For example, I as an artist, I'm going to reward everybody who owns my art. I'm going to care. I'm not gonna reward you if you just made a copy of it, right?
Yeah, because artists can say that if you own like
Disney.
If you own a limited edition, I can give you. It's a term called airdrop. They can airdrop like extra art, right?
I have a question. I have a question for Crypto Gillis. Do you play any video games by chance, or have you ever played a video game in your life?
Yeah, I did. Yeah.
Okay, so
I'm trying to get a PS4. I don't have a PS4. I want a PS4.
Okay. So you have played a video game. So
I love
have
video
you
games.
ever bought a skin or any sort of like cosmetic in a game? Like with money?
Sorry?
You have. I mean, that's technically could be an NFT. Like you could just mint that as an NFT.
Repeat the question, I couldn't hear you.
Oh, so what I was saying was because you've played video games, many people, and the gaming industry is massive, right? When you play games, the biggest volume of money that's flowing into a game is the cosmetics and the items that you can purchase within a game. It's not the game itself. It's the things after you buy the game, because there's economies within these games and gaming ecosystems. Look at Axie Infinity, for example, right? It's a huge ecosystem, and people in the Philippines are literally playing enough to make a salary to live their lives, right? And I'm looking at the OpenSea volume. There's $165 million worth of ETH moved in the last 24 hours, and OpenSea just passed $1 billion in monthly trading volume. So if you think that nobody's trading NFTs, you're clearly wrong, because people are trading NFTs.
I just see issues. I see so many issues with ownership, trademarks. I could take a picture off the internet anywhere, post it as an NFT, and who the hell owned that originally, and then it's like commonly viewed picture, and somebody, oh bang, all of a sudden owns the original NFT.
Well, you're talking about transferring existing things into NFTs. I'm talking about like right now the space is more like we're creating new things using this new system. The problem you're saying you're seeing is a huge issue with tokenizing existing things, right? That's obviously tough. I mean, it's like tokenizing real estate with NFTs. That's like years away, right?
We're trying to do that, just FYI. For everyone on this call, we're already starting to do that. So
I'm gonna say we're gonna start wrapping up here. I'm getting closer to 2-hour mark. I can see that we're having a good conversation about NFTs, and maybe we can rain check the NFT conversation for like in 2 weeks.
Hey James.
If any of you guys are up for that, no, it'll probably be one of you guys, Christopher, James.
I got some.
And we got to lead the conversation, because NFTs isn't really my space. I'm actually more into like blockchain gaming and DeFi. James.
Yeah.
Start now. I went through 2000 when the 2000 crash. I'm old enough to tell you now, because I know better. 2000, I should have started right in that spot when I knew what's going on. 1995, 1994, I didn't. Start now. NFT's gonna be huge.
What? Oh yeah. I totally
could be.
That's not. I'm already sold on that concept. I don't. I'm definitely. I mean, I've been in this space for a while, so.
And we should probably preface it with, probably about 95% or more of the NFT projects will fail. It's just like any sort of business or any sort of anything you start. Stuff, right? Most things will fail. However, there are blue chip projects For example, CryptoPunks or Bored Ape Yacht Club. All
But you
those
need the
projects are
hype.
legacy projects.
You need the hype. You need
You
the
do.
hype to
You need the
attract
hype, yeah.
capital and also attract brain power.
But you also need
attract
utility
developers.
and you need community and you need
Yeah.
roadmaps. You
Right.
won't be able to get anywhere without any of those
Yeah,
things
yeah,
as well.
Yeah.
Yeah.
But it's an interesting conversation, and I think a lot of people don't understand the ownership aspect and the rarity aspect behind NFTs. But one aspect I think will be really big is gaming, right? And playing to earn games like Axie Infinity, which will kind of roll over into NFTs as well. So that's pretty cool.
Any plugs for any upstart games coming up? Because I think you're right. I think games are going to boom.
Yeah.
There's a lot of big ones coming online. I know one that I'm not invested in this project, but just one that I've heard and I've actually done a little bit of research on is Illuvium. I don't know if you guys have seen that one. I've heard really good things about that so far.
Certainly doubling, tripling.
There's no scarcity in NFTs. You can do an NFT with billions and billions and billions of images online in the real world. Creatively, there is no scarcity at all with NFTs.
So is art, right? Like I can.
I mean, we can probably debate that at a time. Yeah. I do want to make sure we do end on time, and also we have some good topics for in 2 weeks. I guess we can probably do NFTs in 2 weeks. But overall, I do want to steer back to our original topic, which was on like passive income and DeFi, and I do hope that like for everyone who is watching on YouTube, right, that hopefully we did cover a lot. I'm going to keep the room open for further discussions. I guess if you guys want to continue NFT, but I just want to thank everybody for joining us today, and yeah,